Has Ben Bernanke got us hooked on stimulus? Joining me now, Peter Schiff, CEO and Chief Global Strategist of Euro-Pacific Capital, who says the Federal Reserve is the biggest enemy of this economy. Peter, to you, has the Fed gone too far with its easy money?
Well, absolutely. Remember, it was the Fed's easy money that gave us the housing bubble. So we wouldn't have been in this mess without the Fed. But now the even easier money that we have now is producing an even bigger bubble, I think, in government, in the bond market. And when the Fed ultimately takes the cheap money away, which it has to do, the economy is going to collapse. If it never takes the cheap money away, well, then that's even worse. Then the dollar collapses and we're really in trouble.
You don't really see a way out of this, but I got to tell you, the markets were reacting this week, selling off stocks after it became clear that the Fed was talking about just that, taking away the punch bowl. Do you think we'll have an extended period of stock market sellout? What is going to be the reaction? What's going to be the fallout?
Well, first of all, the Fed didn't say that. All that you got from the Fed minutes was that if the economy kept improving, that they would need no additional stimulus. But if the economy retreated, if the evidence showed that the recovery was faltering, then QE3 is on the table. And the thing is that there is no real recovery. It's phony. It is simply a stimulus-induced consumption binge. People think that the Fed's cheap money is the equivalent of training wheels on a bicycle, and that the economy is in good shape and it's time to take the training wheels off. They're not the training wheels. They're the only wheels. But we have to take the wheels off, even if it means that the economy falls over, because if we keep pedaling, we're going to go over the edge of a cliff. And that's a crash that we don't want to have.
Well, Peter, it's interesting because you can think of Japan, right? They held interest rates there very low for, a decade? That didn't work. There were all kinds of supports.
No, it didn't.
For the
we don't
economy.
want to copy their mistakes, but we're not going to be able to keep them that low for that long because we don't have the domestic savings that Japan has. We have to borrow from abroad, and we already can't do that. The Federal Reserve is buying up most of this paper, and it has to create money to do it. That's why gas prices keep going up. That's why food prices keep going up. The Fed is creating all this inflation, yet is blind to it. And if you remember, the Federal Reserve assured us in 2004, 2005, 2006 that there was no evidence whatsoever of a housing bubble, and that those of us that were talking about a housing bubble were wrong. Well, the Fed was wrong when it didn't see the housing bubble, and they're wrong now when they don't see inflation.
So let me interrupt
Eventually,
you here,
when the markets figure it out, we are in big trouble.
Right. Scott Bullard saying we got to bring this to an end. And yet you hear Tim Geithner every day saying we've got to continue the stimulus. This has to go on. There's this divergence, I think, between many in the Fed and between the administration. What do you make of that?
Well,
is it political?
If you want to perpetuate this phony recovery where we spend more borrowed money, then yes, we need the cheap money. It's like if you want to stay drunk, you need more alcohol. But I don't want everybody drunk. I want to sober up. But
we have
a big withdrawal. There's going to be a big hangover associated with kicking this stimulus habit.
Sir, if I could, is it political?
Well, I think it's everything that Geithner says is political. He represents President Obama. He doesn't really represent us. He's trying to get his boss reelected. So whenever anybody from the administration says something, of course it's got a political spin. Whether or not he actually knows anything about economics, I don't know. Remember when Geithner was at the Federal Reserve Bank in New York, he was one of the cheerleaders for the economy. He was one of the ones that said there was no housing bubble. It was a bank in New York that did a study that concluded there was no housing bubble. And then after it burst, it was Geithner that said it was contained to subprime and that we shouldn't even worry about it.
Peter, can we survive your prescription of taking away the punch bowl, ending all the supports? A lot of people out there think the economy is improving, but you see it just the opposite. What will happen if there is no support from the federal government?
Well, then we're going to heal. But, I've said many times, you can swallow some bitter-tasting medicine. We'll survive the medicine. What we won't survive is to continue the stimulus. That's what's toxic. My prescription is we take the pain now and we heal the economy and we get lasting prosperity. What we have now is we prevent the economy from healing. We make all the structural problems worse. And the ultimate pain associated with doing what we're doing now is going to be far more excruciating than the pain that we would get if we did the right thing.
Interesting conversation, Peter. Thanks for coming in tonight. We appreciate it.
Anytime.